Marhaba, and thank you for staying with us. My next guest, and everyone always says someone needs no introduction, but this woman, having just tried to walk her through 400 metres of hall here and being stopped every 20, certainly fits that description. She is Dr. Sayeeda Jaffis. She is a Senior Vice President and Country Manager for the Gulf at Visa. She has a long and storied history in the financial services sector here in the UAE. She sits and has sat on numerous boards of universities, of banks, of financial territories. And today, she is indeed going to look into that crystal ball and talk about the future of payments. It's usually a tough slot, Dr. Sayeeda, coming late in the afternoon. Everyone's eaten their mid-time sandwiches. We're full of carbs, but our job is to keep them awake. So, let's start, for we only have 25 minutes, and I don't want to waste any of it. Let's set the scene first off. Before we look into this crystal ball, let's look at where we are at the moment, where the UAE in particular is on its payments journey.
Happy to. So look, the UAE and the GCC has had an incredible last few years when it comes to payments. So if I reverse back about 3-4 years pre-COVID, it was a different world that we lived in. Cash was the most prevalent way of paying and getting paid. We were collectively a society of 60-65% cash payments when it came to consumer transactions. Fast forward 5 years to where we are today, and today, less than 40% is actually cash. So if you look at it, that's more than a 50% jump in terms of non-cash payments, which is just remarkable. And this is just symbolic of, frankly, how we do things in the region, right? When we start accelerating, we accelerate, we leapfrog, and that's what we see.
So what's that cash been replaced with? Is it cards?
It is primarily cards or card networks, plus tokens, and other payment methods. If you look at it globally today, we as Visa have roughly 4 billion cards and a bit more, about 4.8 billion tokens.
And by tokens, you mean?
By tokens, I mean if you have a card and you've provisioned it in your wallet, such as Apple Pay, for example, or if you have it stored on file somewhere at your, at a retailer or so. That's a token. That's a digital token, a digital replica, if you will, of your physical card. If you put these together, we have about 9 billion globally. That's more than one per human being alive today on this planet. I'll take a moment. More than one credential per human being alive today on the planet. That's a lot. And that, in very large part, is what has been driving this conversion towards a cashless society.
Are we also moving, though, towards a digital society? I bought a flat earlier this week. It involved bank managers' checks, it involved my own checks, it involved a physical card, and it involved some cash. How do we digitize?
So that's a very good question. And what you're referring to is that remaining 40%, that is still cash or other forms. So if we look around, there's probably 4 or 5 key types of spend that have not yet fully digitized. One is rent, exactly as you said. A lot of that tends to be check-based. Second is P2P. So what does that mean? Person to person. So if you and I go out, grab a coffee, if one person covers it and the other person has to pay the other one, we still do that through cash or other means, or maybe a bank transfer, not necessarily digitally. Or the third big way, or the third big area we see is remittances. A lot of times remittances are cash-based as well.
So what's going to drive the change? Is it going to be consumer-led? Is it going to be regulation-led? Is it going to be the likes of Visa and the banks driving it and we will follow? What needs to happen?
A few things. So different markets react very differently. Some markets, it tends to be much more regulation-led. In some markets, it tends to be a lot more consumer-led. I think in our market, we're still building out a lot of the infrastructure that is necessary for some of these. In some cases, it exists. In other cases, it's being built out. As this continues, And as this grows, I think we will see more and more forms and use cases that will be digitized. So I think if I look ahead and if I say the next 2 years, I think the amount of change we're going to see is going to be tremendous.
What's the lag here? Because a lot of the micropayment apps that we read about, the P2P apps, like you say, the direct, I've bought a coffee, you've bought a coffee, we'll just split it. We're not using them here. We're not using them here and they're not supported here. How come?
So you need the underlying technology and the underlying infrastructure that is required for these payments is what is currently being rolled out. Once that technology and that infrastructure exists, then this ability to transfer money person to person, either in real time or in near real time, that's when that becomes available. So just as an example, right, we have technology that's called Visa Direct. That's pretty much near time, and that's payments where, if I know either your phone number or your email address and I choose to send you money, pretty much near real time, you'll get the money. Once that is rolled out at scale in the local markets, that's when we'll start seeing these.
Are we actually leapfrogging some of the individual apps here? I mean, I'm thinking of services such as Careem Pay. I'm thinking of what Botum is doing with the Everything app, the Ultra app. Yeah. Are we just going to leapfrog the idea of having 7 potential different payment platforms?
I think we are leapfrogging in some ways, catching up in others, and really just trailblazing and figuring out our own path in other ways. So I'll give you an example. In the UAE, we launched something that frankly was a global first for us, which is to enable point of sales solution that is very similar to installments or BNPL. That's something we're all very familiar with. Now this, to be clear, what is this? This means you go to any retailer, and if you want to buy something, you can actually either tap, swipe your card or your phone or whatever you want. At the point of sale, you will be able to say, do I want to pay this through my credit card, or do I want to pay this in installments, without having to actually have signed up, right? So I think this is a solution that exists in isolation and bits and pieces across the world, but the way it's going to be done here, never been done. So in my mind, that's an absolute leapfrog. So there are lots of these interesting things, interesting elements that we're bringing together where, frankly, we're leading the globe, because this is a part of the world that likes to experiment, that likes to try new things, and that just likes to be ahead of the curve as much as possible.
Who's going to own that, though? Is it going to be the small startups? I've spoken to a lot of them today. Is it going to be the majors, such as yourself? How's it going to work?
It's an ecosystem, and it really does take a village to be able to push forward the innovation agendas that we have. And what we see more and more is the traditional roles and the traditional, let's say, forms of association are very different. Lines are blurring. You're partnering on so many different elements with so many different players. So I think that will just continue to grow, where it's not one particular person or one particular organization that owns it. It's collectively that we drive this forward, and collectively we come up with solutions that are trailblazing.
How do we make sure everybody gets to take part in this? I mean, I'm talking about the great unbanked question, which is one of the areas traditionally where cash and mobile phone payments are predominant.
Yeah, so this is an important part. We are blessed in many ways that, at least in our local economies, in our local societies, while we do have a population that is unbanked, relatively speaking, it is less than which one may have seen in other parts. That being said, it is still there, and there is still need to do more in that space. So this is an area that we work very, very actively with both our issuing partners, but as well as with different fintechs. So Visa is very, very involved in working with fintechs across the globe. We do things like what we are here to do today, which are fintech summits, but equally, we work with fintechs on enabling innovation. We have something called Visa Everywhere Initiative, VEI. That is an open innovation platform. We actually just open up to the fintechs all across and we say, hey, share your innovation with us. And if we work with them and we go through the system and we go through the process. And then at the end, we select winners and then with them, we help them develop and offer their solutions across the board.
What does all of this mean for authentication? Does it mean we need more of it, or will we be able to do away with a lot of it?
Authentication is critical, right? Even as the world moves from a physical to much more of a digital environment, we need to be able to take a lot of these tools into the digital world. So that is something that I would say it's not that there is no need for it. There is a need to do it even more and to do it quickly and to do it real time. So the whole authentication, authorization journey is something that is very, very critical and very important. It's actually something where Visa has spent a lot of time on. We have, I know the buzz is all about AI, but the reality is we have been using and deploying artificial intelligence and have designed tools exactly for these journeys. And today, when you use your card or your credential, most of the time in our regions, what will happen is that transaction, from each and every one of those transactions, 500 unique attributes. 500 unique attributes per transaction are parsed. Those are then looked at using different AI models to determine whether we believe those transactions are valid, what the rating, if you will, of those transactions are, that then get fed back for decisioning. So this is an area that I think is going to require more work as we go, and we're very actively deploying a lot of AI-enabled tools for it.
Okay, well then let's talk about how authentication is changing. Is the CVV code on the back of the card going to die?
Look, I think it's going to take on different forms. CVV is just a form, right? And I think there will be other forms, there will be different forms. If you already have a tokenized card, then there are different ways of doing it. So again, it's going to evolve as we go through over time. I don't think it will die anytime soon, but again, the need for doing it and the tools for doing it will change.
What about two-factor authentication?
Two-factor authentication is very important, and it has absolutely become a standard in many shapes and forms, and I think this will continue to be the case for a bit.
Okay, let's have a look at what is being termed fintech creep. Because we're talking here, even when we're talking about startups, we're still talking about entities that are operating in some way within, even if it's in the disruption edge of, the financial system. You and I recently read the same story in the Financial Times about the vast reserves that Starbucks has. I've got the numbers here, 2.1 billion nearly in customer cash because of people who are willing to trust Starbucks through their loyalty scheme with their money. And you referred to that as fintech creep. Is some of these players the real disruption?
Look, this goes back to the comment I made earlier, right? Which is there are no traditional roles anymore. I think there are so many different ways of doing the same thing that genuinely it's a very different world that we live in today. And which is why it becomes more pertinent to make sure that we actually as consumers are more aware and more vigilant and diligent in terms of knowing what is going where and what's happening. So the example that you cited, absolutely, right? There, Starbucks, as part of their loyalty program, you can preload money into their wallet, and that wallet is then cash or cash equivalent that's sitting over there, that's consumer deposits. So yes, I think we see a lot of this. We see a lot of different merchants, partners, et cetera, that are creating these. I think as and when they become bigger, there's a question that, again, different markets will ask at different times in different forms around what is this entity and what do we do with this entity and how do we protect the consumers that are part in some shape or form of this entity. But I think it will happen and it will continue to go down the path.
What's Visa's role in all of this? The last guest who was on stage was talking about DeFi with Jane, was talking about decentralized finance. How will Visa continue to be a player, to almost justify being a player when everyone is moving into this space?
So at Visa, we believe fundamentally in providing choice to the consumer. When you or I go, we may go to the exact same store, we may buy the exact same thing, but we may choose to pay in very different ways, right? You may choose to pay through a wallet. I may choose to swipe my card. Perhaps somebody else may go tap their phone. Perhaps somebody else may pick yet another way. So it is, at the end of the day, the consumer choice on how we want to pay. Equally, on the other side, the merchants, the stores, the operators, they would like as many options to accept those payments as possible to be able to accommodate the consumer. So fundamentally, ultimately, it comes down to that choice. Our role as Visa, we view it really about providing the interoperability and providing the infrastructure for those networks, and to become a network of networks so that all of those networks can actually be there and provide the choice for the consumers. So if you may choose one way, so exactly as you said, right? I mean, perhaps you have a wallet. Will that wallet be accepted at all the different merchants or not? Or will it be limited? We want to be able to provide that interoperability and to say you should be able to use that wherever you want, between the different wallets, between different elements. So provide that interoperability, provide the ability for different users and merchants to be able to do what they want. And at the same time, to provide each and every one of those payment platforms the option to both what we call on-ramps and off-ramps. So load the wallets, load the different instruments, and to be able to take the money out of those instruments.
Does it change, though, what merchants particularly are willing to accept in terms of processing fees? If there are all these different options, the buy nows, the pay laters, the installments, the P2P apps, does it change the revenue model?
I think ultimately it's a matter of what value it provides to the merchants and what value it provides to the consumer. If something does not provide value, personally, I think it's, even if you give it away for free, it's very hard to get adoption of that. Versus if something provides a lot of value, but even if you have to pay a bit more for it, you know what? It provides value that others can't. So I think there's a trade-off that needs to be made there.
We've got 6 minutes left and we're only just making it to crypto. Tell me where Visa stands at the moment. Tell me where we're going.
Crypto. Look, a lot has been said about crypto, but crypto for us it's a very interesting space. It's a very fascinating space, and we've done a lot of work in crypto. Crypto, globally speaking, is in various stages of development, depending on which market you're in. Some markets are very bullish about it, and they've taken it, and they're doing a lot with it. Other markets are still very much holding back on it. Our view, again, comes down to is, yes, it's the choice of the market within the regulatory framework, but equally, it is very, very much a test and learn, grow, develop, change as we go. It's not the destination yet. It's, if I quote a comment that was made earlier, I think we can't even begin to think about the innovation that is yet to come in crypto. So I think it's still very early days. We, again, as Visa, would like to provide that choice. So today, we have partnered with more than 65 different crypto platforms across the world on, again, two things: on providing them with the ability to on-ramp and off-ramp the movement of funds, again, on crypto. That's one. And the second is to be able to provide the interoperability. So to have cards or to have networks that allow transfer from one to the other. So we will continue to grow, we will continue to develop, and I think we will continue to learn together with everyone in this room and many, many others out there that are very actively targeting the crypto space.
What's going to speed that up for you, though? Bring it a little bit more mainstream? Is it going to be user demand? Is it going to be regulation? Is it going to be, I don't know, a soft entry such as stablecoin?
Yeah, I think it's going to be a few things that are going to have to happen in parallel for this to really and truly come up. So what we've seen is that, number one, it's absolutely consumer demand, and that's been pulling this. That was the case for many years. It's now, I think it's a bit more tempered, but that's going to be one. I think the second is the actual technology and the availability and usability of that technology. And then the third will be the regulation that exists around it. So all three will almost have to move in tandem to be able to create something. But I think more importantly also is crypto will eventually have to fill or create satisfied certain use cases that are perhaps unique to crypto that cannot necessarily be fulfilled or handled other ways. And I think that's perhaps when we will see crypto really come into its own. So again, I think lots of innovation ahead, lots of unknowns ahead, and that's what makes it interesting, right? I think pretty much everyone in this room, right, if I ask everyone in this room, have you dabbled a little bit in crypto? Most likely, most hands will go up. I don't think very, very few, if any, hands will not go up. So I think we've all gotten that one level of awareness and comfort and familiarity. Now the question is, can we take this into really, truly new, different, unique use cases that perhaps cannot be dealt with anywhere else?
Well, let's spend our final 3 minutes really looking into the crystal ball, because Visa has been dabbling in a lot of really interesting places, from using a Mercedes-Benz as a payment platform to having football fans using facial recognition in Qatar. If you and I were sitting on this stage in a year's time, 2 years' time, what could we possibly be talking about that we're not talking about today?
So I think there are, if I think of innovation, there's probably two forms of innovation. There is the more, what I would say, the traditional payments that we do day in and day out, where there's a lot of innovation. And then there is the alt payment methods, the new alternate payment methods. I think those are probably the two big areas. So in terms of the more, let's say, payments that we would use, you mentioned one, right? The facial recognition payments. That's something that we piloted during the World Cup, and it was super interesting. It's simple. You walk in, you register, you link your payment credentials, and then your face ends up becoming the way your payment will be authorized, the way it will be done. And you can, so I tried this, went to the supermarket, bought a bunch of things, checked them out, stood there, face recognized, payment made, go on, right? Beautiful, seamless, very, very simple. Very easy, and frankly, just a great experience, right? It's fun, it's easy to do, it's nice. And I think we'll continue to see more and more innovation coming down that path, where we take let's say, the more traditional card payment network. Equally, we see a lot of very new, interesting cases that we will continue to go and continue to grow. So, for example, we talked about BNPL, the installments. I think that's something where we are seeing a lot of movement in our part of the world. It actually does provide consumers as well as merchants with a lot more option, and I think we will continue to see that. So that's one, BNPL. I think the second thing we will continue to see adoption of is wallets in our part of the world. There are some fantastic examples of this. STC Pay in Saudi, for example, has done a fantastic job of this, and we will continue to see this grow and do more and more of. So that's another one. I think the third one, which we talked a little bit perhaps less about, but what you were alluding to, is RTP, real-time payments. And linked to real-time payments is open banking. And it's the conflux of those two that will help create some of the, help target some of the use cases that today aren't really, we don't target. So hopefully, before next year, when you and I go out for coffee, we will be able to use some of those technologies and be able to split those payments in that way, because we will be able to do it. I think fourth one is probably then around embedded finance, which is, you picked the Mercedes-Benz example, right? And that's exactly what it is, embedded finance, which is the providing financial services at a point which is not a financial service or not in the finance chain. It's actually at the consumers, it's in a different part of a consumer journey. So I think we're going to see more and more of that. Payments will continue to become even more invisible than before. So these are probably some of the big areas, big trends, big things we see that I think we will continue to discuss for a while.
And that is us. Dr. Saida Jaffer is Senior Vice President and the Group Country Manager for the Gulf at Visa. Lovely chatting to you as always.
Pleasure's mine. Thank you.